Here we are in the throbbing center of Right Kingdom New Construction, which is mercifully nearing a conclusion. I am in my University of Colorado gold necktie, not because I have a kid who's graduating, but because my son, after 2 years of trying, has passed his first CU course. And we're waiting on the other one to see if he gets to stay there, but that's a different story. The financial world this week, Friday, May 9th, is odder than usual. The heartbeat of the financial markets is the 10-year Treasury note. It's how U.S. long-term bonds are doing. And this week, the yield on the 10-year simply froze. I mean, the price froze. There wasn't really any movement at all. We've been in a narrow band all the way back to the beginning of the year, but this week it just flatlined. And typically, a rare event like that says that the market's in the process of making up its mind to go somewhere else in a hurry. During the week, one of the events that should have moved the price of the 10-year was the United States Treasury selling an additional $25 billion worth of them, all at once, at auction, Wednesday. And this is at the same time that the Fed, for the first time in 5 years, is in the process of no longer buying 10-year T-notes and other long-term securities. And so this issue came to auction on Wednesday and disappeared in a heartbeat. Didn't cause an upward flicker in rate or downward movement in price at the new supply. And almost 3/4 of it was snapped up either by institutional investors indifferent as to price. They put in their bids, just whatever the average is, we'll take it. Half of it went to overseas investors, foreign investors. The pregnant moment involves especially Europe this week, which is slipping quietly into deflation. Germany is not, inflation rate up here, the rest of Europe deflating. And the indication from the European Central Bank that they're about to intercede. We're not going to know for 3 or 4 weeks, but the spreads between European debt and US debt are enormous. And European sovereign debt, which used to be yields of 7–8%, all of a sudden have yields lower than ours. German 10-year yield is 1/2 the United States Treasury 10-year. And as investors are desperate to find yield in something, even though the theory still is that the US economy is going to accelerate, money's leaking around corners into US paper. My hunch is that US rates are going to fall unless there is a strong rebound from the data we got last week about the first quarter of 2014 here in the United States, and which was a break-even quarter, a gain of 0.1%. On further review this week, the great Wall Street houses assume that that figure will be revised not higher but lower. So there's a great deal hanging in the next month. Europe, what the ECB does, and here, what happens to the job market in the month of April. The month of May. April looked like a strong rebound. We'll see if it's sustained, but business here locally is fantastic. The last 10 days, my phone has never been busier after a quiet winter. We're in a very fortunate part of the world, and I wouldn't let intentions about real estate transactions here to be altered by things that will happen externally. It doesn't look to me as though rates are going to intercept anything. Best to all, especially graduates.